Hi, I'm Susan Bender with NRI Relocation, and I'm here today with Bill Martin of Cole Martin, a local CPA firm, and we're here to talk to you about the exciting topic of moving expense deductions. So, first of all, who can deduct?
Well, somebody who has a new job, and the job needs to be at least 50 miles away from their current location, and they need to have that job be permanent, stay there at least 39 weeks.
Okay, so what happens if it's January, I'm thinking about doing my return, I haven't been in my new job for 39 weeks, what do I do?
Well, as long as the job's intended to be permanent, you could file your return, take the deduction on the return, and you'll be fine.
And if I don't meet the 39-week test, do I go to jail?
No, you never go to jail. You have multiple choices. You could amend your tax return. You could pick the income up for the deduction you took in the prior year and the current year, possibly when you have less income if you lost your job, or you could potentially find another job to help you meet the 39-week requirement.
Okay, good. I won't go to jail. So what if I move and then my employer lays me off? What about that time test? It's not my fault.
If it's intended to be a permanent job, you always have the possibility of finding a new job. That's what I would do, is look for a new job and try to meet that time test. You can pick the income up in the year that you don't have a job, so it'll be less painful for you.
Okay. What if I transfer again before meeting the time test?
Well, if you're with the same employer, then that'll count and you won't have an issue. That's one of the exceptions.
Oh, perfect. So that's waived. All right. What if my spouse and I both work? Can we combine the 39 weeks?
No, either one spouse or the other needs to meet the time test and the distance test, but both don't. So if you're filing a joint return, as long as one of you meet the test, you're fine.
Okay, and do I have to stay at the same job?
No, you could combine multiple jobs, and the 39 weeks doesn't need to be continuous, as long as it's in the 52-week period.
Okay, so there's a distance test and there's a time test. Now, what can I deduct?
The cost of moving all your personal effects, the cost of moving your family and your pets, the cost of temporarily storing your personal stuff up to 30 days, the cost to travel to the new location.
Cool, I can deduct Briggs and Stratton's transportation to the new location. Those are my cats. Okay, so the mileage reimbursement, why is it different from a business expense?
Travel, it's personal. They only allow the direct expense, the gas and the oil that you use in your car. So it's a lower reimbursement rate of 24 cents a mile, where business includes the depreciation of the car, the insurance. It's a higher
Okay,
rate.
so can I track my expenses and take whichever is more?
Yeah,
like if gas goes up to $5 a gallon and they're only going to give me 24 cents?
Right, or you're driving that SUV that gets 10 miles to the gallon.
Yeah.
Then yes, if you track your expenses, you can take the actual expenses if they're higher.
All right. Now, there's got to be a specific form I'm going to use when I prepare my taxes that is going to show me or tell me what to do?
Right, your deductible moving expenses, they go online on Form 3903, which flows into your 1040. It's a 3-line form. It's pretty easy to use.
Okay, and where can I get more information?
The IRS has Publication 521 that explains all the moving expense rules. TurboTax will walk you through it, and you can always contact a tax professional like me.
Like you. Okay, so if you can't remember the 3903 and the 521 and such, you need to call a professional.
Yes.
All right, very good. I hope we answered your questions today about moving expense deductions. I'm Susan Bender with NRI Relocation, Bill Martin with Cole Martin, and if you haven't done so already, like us on Facebook, follow us on Twitter and LinkedIn, or visit our website at nrirelocation.com.